Okay, most business owners think they're in total control of the company finances. But here is a very hard truth. If you have got an overdrawn director's loan account, you are sitting on a financial time bomb. Ignore it and you're not just risking a tax bill, it could lead to bankruptcy, director disqualification, personal liability. This is the reality that nobody tells you about. But I am going to make sure in this video that you, the director, doesn't get blindsided. So let me ask you a question. Have you ever taken money out of your company thinking, no big deal, my company, do what I want with it? Well, what if I told you that a simple mistake like that could land you with a massive tax bill personally, a massive corporation, well, another tax added onto corporation tax, and sometimes even bankruptcy? Oh yeah. That is how serious this can be. And this video we're going to be breaking down exactly what is a director's loan, why it can become a ticking time bomb, and most importantly what you can do to avoid falling into this trap. And it is a common trap. So whether you're starting out or you've been running a business for years and years, this is information that you cannot afford to miss. So let's dive in, and by the end of the video you'll be equipped with the knowledge to protect yourself and your business and your personal wealth, family, home, other assets. Now let's get straight to the point. What exactly is a director's loan account? And why does it cause so many headaches? I'm going to break it down step by step. I'm going to talk about S455 tax, personal liability, and worse still, an insolvency practitioner knocking on your door demanding that you pay your loan back right now if you end up in insolvency. Remember, Chris Worden, Director First, and I'm going to be tackling something today on the video that could save you a world of pain as a company director: overdrawn director's loan accounts. This is not the first video I've done, but I think this one is going to be really detailed and really will help you. Now, you're probably thinking, God, Chris, I've heard loads of videos of this, it sounds pretty boring. Stick with me, because this is one of those things that can make or break your business and save your family home. So, first off, let's clear up what a director's loan account actually is. If you think about it as it's like a running tab between you and your company. Every time you take money out of the company that is not salary, dividends, or like reimbursement of expenses, it goes on this tab. Now, if you repay that money within a reasonable time frame, you're in the clear, no issues. But if you take out more than you put in and you don't repay it, you end up with something what's called an overdrawn director's loan account. Why does this matter, you're probably asking? The reason why it matters is because an overdrawn amount isn't just sitting there. It's actually a debt that you as a director owe to the company. If you don't handle it properly, it will snowball into something pretty serious. Now, one of the most serious things with overdrawn loan accounts, I'd say the biggest trap directors fall into, is the S455 Tax Trap. And it's a special type of tax that kicks in if your DLA, Director's Loan Account, is overdrawn at the end of your company's accounting period and you've not paid it back within 9 months or 1 year after the year end. What do you think the tax rate is? You sat down? 33.75% of the overdrawn amount is taxed to the company. So let's think about that for a second. Let's say you borrowed 20 grand. You've not paid it back. That means your company could be on the hook for your corporation tax and an additional £6,750 in S455 tax. Now, to get an overdrawn loan account at 20 grand is fairly easy. I see it all the time. I see them at 20 grand, 50 grand, 200 grand, £1.5 million. Now, to avoid S455 tax, all you need to do is ensure that the loan is repaid within the 9-month window. Now, if it's not possible, let's say you can't declare a dividend, you can't increase your salary, then one of the things that you're going to be landed with is this additional tax. There's no way of getting around it. One of the problems that I need to talk to you about is the personal tax implications. There's more to S455 tax than, big corporation tax. If you're not careful, HMRC could treat your overdrawn director's loan account as income. It happens all the time. That means that they're going to hit you with income tax and national insurance contributions on top of the amount. Now it's especially a risk if HMRC thinks you're trying to dodge tax by taking loans instead of paying yourself a proper salary. Now if they decide to investigate, and I promise you they do, you could end up with a significant personal tax bill on top of everything else. But the best way to avoid it all is transparency. You know, make sure your accounts are accurate, up to date. Don't try and game the system by treating loans as an easy way to access company cash. It's really not worth the risk. Now, where these directors' loan accounts become really problematic is in insolvency. Let's take it a step further. What happens if your company runs into financial trouble? The company becomes insolvent, an insolvency practitioner is going to appoint you to sort out the mess. And one of the first things they're going to look at is if there's an overdrawn director's loan account. And if it is overdrawn, they're going to come after you to repay the money. And here's the kicker. You're personally liable for that debt. Now, this isn't something you can sweep under the rug. If you can't pay back the loan, or you do a deal with the insolvency practitioner, could end up in bankruptcy. Could get disqualified as a director. I mean, listen, let's talk about what happens if you have an overdrawn director's loan account and you end up in insolvency. So what happens is the director appoints a liquidator. The liquidator is going to, duty bound to investigate the conduct of the director, why the company's failed. And one of the main things they're looking at is director's loan accounts. Now, if they find out that the director's loan account's overdrawn, they're going to say, right, Mr. Director, how are you going to pay that back? Because it's an asset of the business, it sits on the balance sheet. Their job is to get the money in to, you know, with an ideal world, to pay dividend back to creditors. Now, most directors don't even bloody know they've got an overdrawn director's loan account, and they rush into insolvency thinking it'll all go away for 4 or 5 grand. And then they've got an insolvency practitioner around their throat once they've appointed them for whatever that director's loan account is, 20, 30, 40, 50, 100 grand, whatever that figure is, that's what they're going to come to you for. Now, the critical bit of information here is, as a director, you can choose what insolvency practitioner you work with. By the way, little bit of a plug, we are fantastic here at Director First. We have helped hundreds, if not thousands, of directors deal with these issues. I am not the insolvency practitioner. I work with a trusted panel of insolvency practitioners, and my job is I go out there and get the work with all these fantastic videos that I'm sure you love on YouTube, and I get the director in and I find out what your problem is, and then we go to the insolvency practitioner to try and negotiate a settlement on your director's loan account, because they all have the discretion to do some type of deals, and they range. You know, if you sat there, you've got £1 million house with no mortgage, you are going to pay most of that director's loan account back. If you're in rented accommodation, it's highly likely that there's going to be no recovery made. You'll get a lot of it written off. Most directors are somewhere in the middle, where they have a house, family home with a mortgage, they may be married, they have some equity in the property. What's important is if you've got an overdrawn director's loan account and you are going into liquidation, you get a deal done in principle with an insolvency practitioner before you sign the paperwork. You've got to be proactive with the insolvency practitioner. Don't think that they will forget about it. And if you look at your accounts and there's no director's loan account, you've still got to be careful, because your accounts might be from 12 months ago. They might be from 2 years ago. So that director's loan account could have gone up. It's really, really important you get accurate figures. And the way you get accurate figures, get a final set of accounts done. If you can't afford to do that, maybe you need to look at Xero, QuickBooks or Sage, you know, pull up a trial balance. That will show where your director's loan account sits as of today, on the basis that you put the right numbers in, okay? Listen, if you suspect you've got a director's loan account, get in touch with me, Chris Worden, Director First, for free and independent advice. I'll talk to you about some, you know, decent examples, decent wins I've got for directors before. I don't know, I've got one now. He owes about £55,000 on his director's loan account. The guy owns a property, he has another business interest. He's very, very worried about the prospect of paying all of it back. He'd spoken to another insolvency practitioner who's never mentioned this to him, and we've gone through his assets and liabilities in income and in expenditure, and this guy is going to be able to get his director's loan account settled at about £12,500 to £13,000, and he's going to have 9 months to pay for it. So he's got a really big discount there. But there are other ends of the spectrum that I hear all the time. You know, where I'm a little bit different is I had a guy text me last night. Don't know who this is, by the way. He just texts me saying, need a price for CVL. And I just quote back, I say, listen, I'm not a good fit for you. I can't be arsed with them type of clients because they're an headache for me and they cause themselves absolute murders. So I just text back and says, I'm not really a good fit for you, but thank you for your time and I wish you all the best. Anyway, he texts me back, he says, need price now. I'm thinking, anyway, I've not heard of them, thankfully, right? But I'll get a job in and I'll go, right, Mr. Blogs, Chris, how much is it to liquidate? I said, well, it's going to be £4,000. Right, well, you're too expensive. You have been quoted £2,000. I says, whoa, Mr. Blogs, hold your horses. That's not your problem. Because on your accounts from 2023, it says you owe 60 grand as a director's loan account. Well, and I says, and Mr. Blogs, that's probably gone up because you've told me you've took 50 grand since them accounts are done. So you're going to owe a lot more money on your director's loan account. So forget what it's going to cost you to go into liquidation. That is not the important thing. The important thing is how much you're going to pay in your director's loan account. Based on what you've told me, you've got that big house in the country, you're going to pay about 30, 40 grand back. Oh, Chris, I don't want to do that. You're too expensive. And mark my bottom dollar, you hear off of him again in 3 months. In fact, I'll tell you a real life example. This guy decided he didn't want to work with us. Listen, I'm not everybody's cup of tea. Some people don't like bold people. Some people don't like northerners. Some people don't like people with specs. Some people just don't like me. I'm okay with that. But then this guy's come back 3 months later and I said, listen, that is your problem. I says, be careful who you appoint here. And if you're going to appoint someone and you don't use me, get a deal done anyway. Sure as, you know, he's come back and he's gone, right, yeah, I'm getting absolutely shafted. They're after £100,000 from me. So it is mega important that when you've got an overdrawn director's loan account, you get a deal done before you sign with an insolvency practitioner, okay? Key takeaways, keep your director's loan account in check. If you see your company heading towards financial trouble, get advice immediately. The sooner you act, the more options that you will have available. So, let's talk about some additional issues to watch out for. Right, just before we wrap the video up, you're going to get interest on these loans. If your company charges you interest on the overdrawn loan account, it needs to be at a commercial rate. If not, HMRC can treat the loan as a benefit in kind, which could lead to more taxes. Another thing people don't talk about is the impact on your company creditworthiness. If you've got a big overdrawn director's loan account, it can hurt the company's credit rating. Lenders, investors might see it as a sign of financial mismanagement, and it might make it harder for you to get additional funding that your company needs. Legal consequences. If your company has other shareholders, they could take legal action against you for using company funds improperly. This is especially true if the overdrawn loan account affects dividends on the company or the other company's ability to operate. You're also going to get increased scrutiny from HMRC. An overdrawn director's loan account gets extra attention. If they see something they don't like, they might launch a full investigation, and that can lead to additional penalties and stress. So the bottom line here, overdrawn directors' loan accounts can be a serious issue if they're not dealt with. My advice to you is you take advice soon. My name is Chris Worden. I'm from Director First. If you like the channel, like, subscribe, give us a comment. Thanks for your time. God bless.